Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 4th, Unenjoyment Friday as we used to call it on the floor. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, we did get a lot of PMI, Purchasing Managers Index data, but remember, it's not the real important data that we look at for European region. We look for their flash estimates. These are not nearly as robust, but we can take a look at their retail sales. Came in at 0.1%, expected to be 0.5%. So lower than expected there. They did revise last month's number up slightly from 0.1% to 0.3%. Here in the United States, we got the unemployment number, non-farm payrolls. Unemployment is what we used to call it. Unemployment rate actually downticked, which is good. Came in at 3.9%, expected to be 4%. That's the lowest reading we've gotten since 2000. So in the last 18 years, that's the lowest number we've gotten. Also, non-farm payroll change came in at 164,000 hires, expected to be 190,000 hires. They did revise last month's number up from 103,000 to 135,000. So that revision does make up for some of the miss on the non-farm payrolls, but still not really quite as great as we'd like to see it. And unemployment rate actually has a tendency to really fluctuate depending on people looking for unemployment. If I've been unemployed for a while and I stop with my unemployment benefits, that means I'm no longer unemployed if I've fallen off of the unemployment list. It's just a discouraged worker. They're not counted in on that number. So keep that in mind. And now that we have had the FOMC, stay tuned for just about every Fed governor to be speaking and talking their position going forward. They've had, going into that meeting, a blackout date, if you will, 2 weeks before. They're not really allowed to talk about economic policy. Now that that's out of the way, they can all start spouting off. So later this afternoon, we get Dudley, Williams, Quarles, and Bostic all speaking at different places. But that's what I'm talking about. All right, on to the overall markets. We've got crude oil moving higher by about 50 cents. Pretty quiet, but it is bumping up against the 50 Fibonacci level, going higher. So this line in the sand right here, right around $69, is going to be defended by the bears. The bulls are going to try and pierce through that Fibonacci level. They haven't been able to really settle above it. They've been able to pierce through it, but not settle above it. We need to settle above that line in order to get some momentum for the bulls. Gold futures coming off a little bit today by about $1.70. Really all that is having to do with is flight to the equity. So you're pulling money out of gold, throwing it into more riskier assets like equities with this move higher. Yesterday's move in the equities was really pretty bullish if you're asking me. But we'll talk about that here in a second. Bonds topping out just a little bit here, bumped up against the 50-day moving average and was unable to pierce through that, coming off with the equity rally. Not looking so good for bonds right now. VIX did come off quite a bit, but we're starting to see it, move back a little bit higher. I'd like to see it stay in the 15s or in the teens anyway, but you can see it really spiked down almost to the 10 level earlier today on the data points that started to spike in and around there. Now, yesterday we were talking about this. We were selling off past the 50-day moving average, basically going down and testing the 50 Fibonacci. We bounced off of that, settled above the 200-day, and today we got confirmation. You look at this doji, that's a very strong doji at the bottom of a move. It's not a major move here, but you can see it is still going to act as a major support just by bouncing off of those, settling above a couple of other ones, and then today off and above the 9-day moving average. Now, all in all, as long as we don't sell off and go into negative territory at settlement or at the closing or very close to it, I think that this is looking very bullish. If we come back off, it's going to look like a continuation pattern to the downside. But as of right now, if we were to finish up here, I would be confident in saying that we are looking to at least go up and test the 23 Fibonacci on these extensions, or where the value area for the point of control is. And then we look at the NASDAQ again, bounced off. We made confirmation to the upside. Again, it's got a lot to get through here, but as long as we don't sell off and come back down here and come to around the 662 662 area, that would look very bullish to me, like confirmation to the upside. But right now we've got a lot of weight to get through to the upside. Then the E-mini S&P is very similar situation, where we sold off, pierced through even the 50 Fibonacci in the E-mini S&Ps, broke through the 200 simple moving average. Today, confirmation again. If we finish here, if we finish down around where yesterday's close was, it's going to look like a continuation to the downside. I think, at least at this point. But right now, finishing here would be very bullish. This is the E-mini S&Ps on 30-minute candles. You can see right on the economic data point, we started basically rallying. Right here is when the data points started coming out. We may have had a little bit of a sell-off in the beginning, but then the overall market championed that number. And as you can see, it's almost been unabated to the upside in equities. And then a couple of trades that I'm going to be looking for today's webinar: Caterpillar, Caterpillar, AT&T, Procter & Gamble. There's a few of them. And Boeing are a few trades I'm going to be looking for in today's webinar. So check it out. I'm going to show you how to set it up for a bullish assumption with selling short puts, high implied volatility, no earnings in and around these. I'm going to show you how to increase your probabilities of success with a trade like this, and all the rules that go in and around each individual option strategy that I talk about. And today's is going to be specifically on how to sell a short put, okay, to increase your probabilities of success. That's it for today. Other than, if you can't take that, take it easy.